All right, everyone, welcome back to the channel. This is going to be the weekly analysis of the US30. This is the first video in the series. As I mentioned to you guys before, I have switched to the US30 because I switched brokers, excuse me, and the US30 actually aligns better with my values. So when I'm doing my analysis, it's going to be a lot easier. Um, I did mention to you that it's also the same as the NASDAQ 100. Um, it's just that I'm going to be using the values on the US30 um, due to the transition on my broker. So before we begin, let's just pray. God, we just thank you again for your blessing and for your goodness and for this opportunity to trade. Pray that you would be with us as we go through the analysis, be it anyone watching this video, may it be instrumental to them and may it serve as a means of helping them to improve in the process. And may we have a successful week, we pray. Amen. All right, guys. So what I've decided to do is, since this is the first time I'm going to be doing the US 30, like I said, it's the same as the NASDAQ 100. I'm actually going to be going through step by step. It's going to be a long video. I'll tell you from now. It's going to be a long video, but I'm going to go through step by step as to how I set my charts up for the week. Okay. All right. So first things first, you want to make sure that you're using the symbol, the ticker symbol that I'm using, and it's going to be the US30 USD, and that's by Oanda. All right. I like to use the Oanda charts because I think they give more accurate information, and it just aligns perfectly with what it is that I'm doing. So the US30 USD, that's the ticker that I'll be using from Oanda. All right. First thing that I do, you guys know that I never leave home without this indicator, which is the higher low to higher high indicator that's available on TradingView. Um, and then once I have that indicator on, first thing I do, I reset my chart. Okay. I want to reset my chart to only show what I'm seeing on the screen at a particular time. Then what I'm going to do, the first thing, I use color coordinations for different days. So for example, I want to make sure that I mark my highs and I mark my lows on each particular time frame. Okay. So the highest point that I'm seeing here is 47,361.6. So I go here, 47,361.6. Okay, I'm going to copy this value because I'm going to be using it quite a bit. So here we go. All right, that's for my my monthly chart. Okay. Next thing that I do, because all the time frames are actually at the highest point. The market is at an all-time high. So all the time frames that I'm analyzing are going to be at the highest point. So this number 47,361.6. Next thing I do is I'm going to put in a line for my weekly. I use black for that. And I do the same thing. Okay, that's the weekly. And then I'm going to go to my daily. Oh, I'm not switching the time frames. I'm sorry, not switching the time frames as yet. I'm just putting in the lines. So my daily is going to be green. And then after that, I put in one for my 4 hour, which is going to be yellow or orange. Same value. And then my last time frame that I'm looking at is going to be the 1 hour time frame. Same value. Okay. Now you don't have to do it like this. I just choose to do it like that. You know, like I said, all the time frames are at the all-time high. So I already know what the high is going to be on the market. I know what the high is going to be when it gets broken. So I just go ahead and do that. You don't have to do it the way I do. I'm just showing you what I do. All right. After I do that, then I'm going to put in the support line for each time frame that I'm using. So remember, because the market is at an all-time high, every single time frame is going to share the same high. Okay. All right. So let's just put in the other line. So again, my monthly, it's reset. So the lowest point I'm seeing here, my monthly, is going to be 66.6. Okay. So let's just change this. So it's going to be 66.6. All right. There we go. And of course, I'm going to change my color because the monthly is always purple. Okay. So this is support for the monthly. This is resistance. As you can see clearly here, once the price hit this mark right here, it has never gone back to here. Okay. And this, the last time it was actually here at this level, was March 09. All right. Since it hit that level, it has never gone back there ever since. And that's why I say the market is 100% bullish. No questions asked. Okay. Next time frame that we're going to do is to go on the weekly. We do the same thing. I'm just putting in support lines. Here's my support point right here. And it's 28,574. So take a line. I'm going to change it to black. And it's going to be 28,574. So 28,574. 8,574. All right, that's my weekly support line. Again, the same thing. Market came, hit the support line, has gone up ever since. Has not looked back. Okay. All right. Next thing that we are going to do, going to the next time frame, which is going to be my daily. We do the same thing here on my daily. Here's my support. Change the color to green. And the daily is 36,618. So 36,618. That's my daily support line. Next thing I'm going to do is go to my 4-hour, do the same thing. Lowest support line that I'm seeing on my 4-hour, all right, is going to be 45,191.5. Change that to yellow or orange. So it's 45,191.5. All right, that's my 4-hour. Next time frame, I go to my 1-hour, do the same thing. Change that to blue. And it's 45,440. So it's 45,440. Okay. We change that, we put that in, and here we go. So we have support, resistance. Okay. After I'm finished putting in all that, then I'm going to go and put in my weekly separation lines and my daily separation lines. I go to my 4-hour time frame. And then what I do is take a vertical line. Market ended here on Friday. That's the last at 1 p.m. So of course, we're going to Sunday. So I'm putting my first line right there, putting it to blue, changing it to 2. Okay. That's my weekly boundary. I'm going to put in 1 for the next Sunday at 5 p.m. And then I'm going to put in 1 for each Sunday prior to. Okay. So it's the first Sunday, 5 p.m. It's always Sunday at 5 p.m. All right. And then the previous week. And then I'll just do another one just for emphasis. There we go. Guess what? You know, we can do another one. Doesn't hurt. All right. Now, these are my weekly boundaries. This is what the price has done every single week. So 1, 2, 3, 4. Past 4 weeks, past month. This is what the market has done for the past month. Okay. Now that I have that, I put in my daily boundary. So I'm going to take another line here. And then I'm going to look for the close of each day. So the market actually closes every day at 5 p.m. 1 second. So 5 p.m. I'm going to change this here. Change the color for my daily. I use green. And let me just see right here. 5 p.m. every day. Just use this tool so I can just repeat the process every day. 5 p.m. and 5 p.m. Okay. So we'll go here. It's going to be 5 p.m. 5 p.m. 5 p.m. 5 p.m. We just keep doing that until we get to, until we have filled in all the lines. This is important for consistency. That way you can see what the market does every single day. Take this tool off, just cancel that line. So here we go. So now that I've done this, okay, this shows you what the market has done for the past month. And the green lines show you what the market does every single day for those 4 months. All right. So in order to see that more clearly, you go on your 1 hour time frame. Okay. This is what the market did every single day. So for example, this is last week. So this is Monday, Tuesday, Wednesday, Thursday, Friday. I'm able to actually track the highs and the lows of everything that I do. Okay. All right. So now that I do that, I have all my lines that I'm looking for, all data that I need to see from the previous week, the previous month, any time frame I'm going on, I can still, I can still track what the market does hour by hour, depending on the time frame that I'm looking at. So that's the reason why I actually do that. It gives me a lot more data. It gives me a lot more control over my data. I'm able to see what the market does on a particular time basis. All right. So now that I'm doing that, I'm pretty much done with drawing my lines for the for the week. Okay. Go ahead and I save that. And then I'll just make a copy because I always like to keep a clean sheet just in case I need to do additional entries. So for example, I'll just make a copy of this. I'll probably just title it worksheet. Work. So I just hit save. So now I have two different charts of the same data. Okay. So in the event that I mark up the sheet and I just want to have a clean sheet just so I can do a quick analysis to see what's going on, I can always just switch between the two. All right. So now that I've done that, it's now time for me to actually check my analysis to see if the market has done anything differently, with the prior week or anything like that. All right. So that's saved. I'll take off this sheet. I'll just close that one out. So here we are. All right. We're currently on the 1 hour time frame. Now, looking at what happened last week, we see here that the market continued to make higher lows to higher highs. There's a new low that was created on Monday, Tuesday, Wednesday, Thursday. Okay. That was lower than these previous higher lows. However, this low is still lower than the weekly low of the previous week. So hence, it's making higher lows. In order for you to actually see that clearly, always go to your larger time frames. Okay? Your larger time frames never lie to you. So for example, let's choose the 7 hour, for example. On the 7 hour, you'll see last week, it made one higher low and it went up and it made a higher high. Okay? So again, the larger you go, the more accurate data you'll be able to see. Okay? So let's look at the past 4 weeks. All right, like I mentioned to you, these are 4 weeks. So here we go. We have a higher low last week. We have a higher low the week before. We have a new low the previous week. However, that was still a higher low in relation to many of the other lows before. Okay, remember the concept is the smaller time frames will naturally break structure in order to fulfill the largest higher low. So a higher low on a larger time frame, for example, will always reflect as a lower high, lower low on a smaller time frame. So if you're looking at, let's say, the 15-minute, for example, okay, this new low that you see right here is going to be reflected as a lower high, lower low on some of the smaller time frames. Well, don't take my word for it. Let's check it. So I'm going to use this tool right here, and I'll just mark it so we can check it. All right. So this low right here, all right, I mark that low. Let's look at a bigger time frame. Let's look at the daily, for example. That day, it showed only a higher low. Okay, and remember, I always said to you, always look at your last 2 points to see what the market is doing. So your last 2 points actually said, well, it made a high, which was an all-time high, and it made a low, which is actually a higher low. Okay, so the market is in fact making higher lows, higher highs. The further back you go, the more points you add, the more valid that theory is going to be. So higher high, higher low. Well, higher high, higher low. So the market is in fact making higher lows to higher highs. So there's no arguing about whether or not the US30, the Nasdaq 100, all the US indices are bullish. There's no question about that. All right. So now it's just about how do you trade it? Well, if the market is bullish, it's real simple. You buy the dip. All you really have to do is to make sure that you're buying from your largest higher low. Okay. So this was the higher low here that we had on the low that we had on the 7 hour, which reflected to be a higher low on the daily time frame. Well, let's look at some of the smaller time frames. So let's look at the 1 hour, for example. That 1 hour time frame, that 1 hour low that we had on the 7 hour is also a new low on the 1 hour time frame. However, it is still higher than a whole bunch of the previous lows before. Okay, so although it's here, notice it broke a whole series of higher lows to higher highs. It took out some lower lows, and this is why a lot of people said, oh yes, market is now going to turn bearish. Absolutely not. It's furthest thing from the truth, because this higher low only reflected this new low only reflected a higher low on your larger time frame, in this case the daily. Well, let's look at something like the half hour, for example. All right, that was still a new low, but it was lower than a whole bunch of these lows here before. So that's why I said to you, the smaller the time frame you look at, the more confused you are likely to get, because this shows you clearly that the market is in a bearish trend when it's not true. It's only in a retracement on the smaller time frames. All right, you go at the 15-minute. At the 15-minute, we need to move this data so we can actually see. So we use our retracement tool. Just put this here so we can see it. Again, here you go, new low, but it's lower than a whole bunch of the previous lows. But if you look, even within this new low, you'll see the lows here are falling lower. So if you're only focusing on your 15-minute or your half-hour time frames, you'll be like, oh my goodness, this market is actually bearish. This market is definitely bearish because it's going down. Okay. However, like I said, just zoom out and look at your larger time frame. So if you take a time frame, for example, like the 2 hour, the 2 hour clearly shows you that while this has broken a few lows, okay, you look at the grand scheme of things, you see that this lower low that was registered here on the 2 hour is in fact higher than even this previous new low that was made back in on August 5th of 2025. All right. So the idea here, guys, is when you are trading the indices, okay, the US30 in this case, you always have to remember that you're trading a bullish instrument. This instrument is 100% bullish. By that I mean, you trade from your largest higher lows and you take profit on your higher highs. Then you wait for the retracement. And then you buy again from your largest higher low, take profit on your higher highs. All right. All right. So let's just go back to where we were. So this is what happened last week. I'll go on the 1 hour so it shows you everything. So you'd have entered this trade here from the previous Friday. This was the low of the week. Okay. See, it's higher than the previous week's low. This was the big sell-off that everybody got excited about. All right. But if you notice, every single low has been higher since. Every single new low has been higher since. Okay. So you got in from here. Price came up. It made a high. Okay. You take your profits here. You wait for your next higher low. Price goes up. Take your profit. Wait for it to come back here. Now, here's where it gets tricky. This is what confused a whole bunch of people. Whenever you take a higher low and the price goes up and makes only a lower high, that tells you that the market is still consolidating. Okay. How do you trade a retracement? By still being bullish. That's important. That's where a lot of people get messed up. Okay. And a lot of people end up losing their accounts because the market consolidates and it traps people who are thinking that the market is bearish. So if you take a higher low and the market comes up and only makes a higher low, you are still in profit because you came in on a low and the market is at a high. Although it's a lower high in relation to the previous high, you still take your profits on the lower high and then you wait for the sell to be over. Then you get in again and then you go up and you take your profits on your high. You always want to remember that concept. Buy low, take your profit on the high. Do not sell. Wait. Buy low, take your profits on the high. Do not sell. Wait. Buy low, take your profits on your high. Do not sell. Wait. Buy low, take your profits on your high. Do not sell. Wait. Do the same thing and you'll be 100% profitable. I guarantee it. Guys, just so you know, I don't sell signals. I don't give signals. I'm just showing you how I trade, how I've learned to trade over the years. All right. Now, the other thing that I want to point out to you guys is every single high on the US30, every single high will be broken. Every single high will be broken. Okay. Not so with the lows. Give you a case in point. Let's look at the sell-off that happened 2 weeks ago. Okay. This was the big sell-off that everybody was saying, oh my God, yes, the market is going to be bearish right now. It's going to go to hell. It's going to go all the way back now. Okay, look at this. This is where the market ended on the Friday. This was the low. this low, I'll mark it. Okay. I'm going to prove to you the market does not respect anything that you guys talk about it being bearish. Okay. It's not going to do it. Any sell that the US30 makes is only a temporary retracement to make a higher low on a larger time frame. Prove that to you right now. This was the low. This was the low that created the higher low on the daily time frame. Go back. Let's look at it. Take it off. Here's the higher low that was made on the daily time frame. Okay, 2 weeks ago. All right, there we go. Let's go back here. That's the higher low. Look at what price did. It came up, it made a lower high. Okay, price came down, it made a higher low. This still didn't get broken. Price came up, it broke this high. Okay, now before I go on, let me mention to you any sells that happens anytime the market makes a high and it makes a low, it consolidates between those 2 points. Okay, the last high and the last low. Okay, so here we go. This is what you have here for consolidation over those 2 points. So here we go. Notice what the market did. It just consolidated between those 2 points, the high and the low. So it came up, made a lower high, made a higher low. Okay, came up, made a new high. It's still lower than this previous high. It's consolidating between this last high, this last low. However, this high got broken. Okay, not so with the low. Okay, then after it made this high, it came down and it broke this low, and everybody got excited again. It's like, yes, it's going to hell. But they did not realize that although it made this new low was still higher than the previous new low that was made Friday before. Okay, so yes, this high was broken. This low was also broken, but it's within the last structure. Now look at what the price did. It came up, boom, took out all of these 2 previous highs. Like I said, every single high will get broken. Price came down, made a higher low. These 2 were untouched. Okay, look at what the price did. Came up, did not break here. Instead, it came down and broke this low. However, what you have to understand is that this low is still intact. Price came up, broke, took out all of these. And it kept doing that until you notice what happened. The all-time high got broken again last week, and it got reset again on Friday. So every single high that the US30 has made in history got broken on Friday. Not so with the lows. There are many lows that have never been broken again. And to see that, zoom out, look at your monthly time frame. So let's go at your monthly. Okay. Remember, this is a support line that we drew for the monthly. Okay. Since 2009, this has never been broken. Price just kept going, going, going. Every single high that has been made has been broken, including the one that it made on Tuesday, I think, of this week. It got broken on Friday. Okay. Now, if you want to look back further, don't take my word for it. Let's go. This is the lowest point that was ever made, in recent times, of course. If you want to go back before, I mean, listen, if you want to do analysis all the way up to 2004 and beyond, well, be my guest. Because at that point in time, okay, let us look here at 2009. If you keep wanting to sell an instrument that is 100% bullish, in 2009, okay, this particular day, in 2002, March 2nd, 2009, that was the lowest point that the US30 made, based on, the 100 chart. Okay, that's the lowest point. Since then, it has broken every high since. Okay, and since then, the low has never come back down to 6,466. In fact, the high is now at 47,000. As a matter of fact, let's look at that particular day. Okay, the high point of this day, which was March 2nd, 2009. To do that, let's look at the daily. Didn't even allow me to go by that. Let's see. 2009. All right, here we go. So that was on the monthly. So of course, when you go on the smaller time frames, it will give you more precise day and time. Okay. So here we go. This was the point right here. It was actually March 6, 2009. Okay. All right. So at this point right here, March 6, 2009, the price was at $6,466.06. Okay. All right. That's on the daily. The highest point on that day, because this is a daily candle, takes 24 hours to be formed. The highest point on that daily candle, and in order to do that, I love doing analysis, guys. I mean, this is the only way you're going to learn and see what the market does. Okay. So if you do that, the highest point on that day, the lowest point was 6,466. The highest point on that day would have been, I want to be able to see it. Let me see it. If I go to my 4-hour time frame, I should be able to see it. Let's see. That was the lowest point on that particular day. But anyway, let's give it the highest point even of the day before. Okay, the highest point of the day before, 6,753. The lowest point it made the next day was 6,466. Okay. Let me draw a line right here just so I can humor you, so you can see exactly what I'm talking about. So anybody who is telling you about this instrument is going to get bearish and is going to have this huge drop like I've never seen before, 100% garbage. And I make no apologies for saying that. 100% garbage. Okay. So we're going to put this line in and I'll make it red. All right. And we're going to do 6,753.1. Okay, 6,753.1. That was the high of the previous day, which was Friday, March 6th. Okay, and this was Friday. Well, I'm sorry. Friday, March 6th. My apologies, guys. Sorry. I was just looking at the daily time frame and forgot that I switched to the 4 hours. So the highest point of that day, this was Friday, March 6th. And let's see, Friday, March. That's Friday the 6th. And then this is Wednesday. Friday, March 6th. Here we go. So this was actually the highest point of Friday. Friday, March 6th. That was the highest point. So we are correct. That's the highest point. Okay. Now, here's what happens. If you're expecting that big drop, right? Back in, when was this? This was in 2009, right? You're expecting a huge drop. Okay. Look at what the price did. This is where we were in 2009. Okay, at the lowest point. And I'm sure people were saying back then, oh my God, this is going to hell. This is going to continue selling. The US economy is over as we know it. This was in 2009. This was the highest point. This is the lowest point. Look at where we are now in 2025 and see if that theory makes sense. So we'll take that off. Okay. We'll reset that chart. Okay. This is where we are in 2025, 47,361.6. Okay. In 2009, this is where you would be. Now, guys, give me a freaking break. Okay? 2009 was the last time we were here. Now, if you are trading to make money and you're sitting down waiting on a sell since 2009 or waiting for a sell wave that is never going to happen. Like I tell you guys, if your strategy is to trade the US30, the NASDAQ 100, the US 500 in a bearish bias, it's 100% losing formula. And I'll put up my strategy against anybody else out there. Anybody that's out there. The NASDAQ 100 is 100% bullish instrument, and it will continue to be that. Smartest thing to do is to trade your largest higher lows, go towards your largest higher highs or your largest high. All right. So enough on that. Like I said, this video is going to be a little bit long because I wanted to take the time to actually just go through and to show you exactly what it is that I do. Those of you who are new to the channel, just so you know, every single week, I'll try my best to post at least 2 videos on Saturday night. So I'll post a review video of what happened the previous week, and then I'll post an analysis video. Sorry. I'll post an analysis video for the upcoming week. Okay. They're not usually this long. Okay. Unless we have something, particular to talk about. All right. The other thing that I wanted to point out with you, and this is one of the reasons why I kind of like, well, I love US30. I love the indices, is that they give you so much data for you to actually use in your analysis. So one thing that you will notice is that when you look at your seasonals data, most people ignore this chart. They don't even pay attention to it. But TradingView gives it to you for free once you have the premium subscription. It does help. So this graph right here, and let's just bring it up so you can see it. All right. This graph right here shows you your seasonal data. This 0% line is where the price starts every single year at the beginning of the year, January. All right, that's where it starts. That's the 0% line. Now, anytime this 0% line gets broken, the price usually continues for the rest of the year. Okay, usually ends above. So the thick line, this is where we are in 2025. Okay, notice it got broken, consolidated along that line, and it has constantly made its way up for the past number of months. Okay, guys, if you're trading the US indices in a bearish mode, do yourselves a favor. Change your bias and learn to trade the indices as 100% bullish instrument. Now, I'm not saying that sells do not exist. However, 99.9% of you guys who are trading and say you're taking sells, do not trade with the understanding that the price is going to reverse once it hits support. You think that the price is going to continue going, and what usually happens is that you find yourself in a weekly bear trap. Every single week it happens. No fail. All right. So this is what happens. Price broke above that 0% line. It continues going. And you can always play around with this. Like if you don't want to see so much data. So for example, I just want to see the past 2 years. Yeah, just do that. All right. Every time the market came down and it broke above that 0% line, we're good to go. We're going to finish the end of the year on a strong note. The other thing that the US30 does is that it also gives you, these technical indicators, right? So for example, you go here, you click on more technicals, you see exactly what's happening. Now, every single thing is telling you right now that this market is 100% bullish, okay? Everything. You guys like to use a lot of indicators and all this stuff. I mean, kudos to you. If that's your way of trading, then that's fine. I don't, but I'm just pointing it out to just show you. Okay, this is on the 1 day. If you go on your 5-minute chart, you see, remember I told you about retracements? Your 5 minute will tell you that the market is selling. And if this is where you base your analysis on, you're going to get screwed, because this is telling you that everything is selling on the market and stuff like that. And when that's not the case, you go to your 15-minute, you notice your 15 minutes is more or less neutral. The higher up you go, you see more of a true position of what the market is doing. By the time you get to your daily time frame, your daily is telling you that the market is in fact buying. All right. Now, I don't recommend relying on these things to actually wait for something to happen for you to decide how you're going to trade. You use indicators to confirm your analysis. All right. Don't use them as predictors. You use them to confirm your analysis. All right. So now that we have got everything like that out of the way, what am I expecting for next week? Well, it's more of the same. Nothing has changed. Market still continues to make higher lows to higher highs, and that's what we will continue to see. How do you trade that? Well, you're going to wait for your largest higher low, and then you're going to buy to your higher high. So market finished at a higher high on your larger time frames all the way up until your 1 hour. Okay. When you go down to, I think, your 15-minute or your half hour, you notice that it still made a higher low. That's where the market finished on Friday. Okay. Personally, I don't like to enter new trades for the week on these smaller time frames. I like to see more of a retracement on my larger time frames. Okay. I still believe that the market will go up and probably break the all-time high again before giving me more of a retracement. So I'm not um um you know excited to jump into a trade as soon as the market opens tomorrow. I do have a trade that's running from last week, which will continue to go on, because like I said, you can literally hold, once you take your largest higher lows, you can literally hold those buys forever. Okay, you can literally hold your buys forever. If you, and let me just show you that real quick. So let's say your monthly time frame, the last higher low, if you got in on this last higher low right here, which was back in, April, okay, you could have literally still been in the trade. Get in on your largest higher lows and you just hold the trade. 100% profit. No risk of you losing your account, because guess what? The market makes higher lows to higher highs. Well, you may say, well, what happened to here? The price came back and broke here. Well, guess what? If you took this higher low and the price came up and made a higher high, and you sat in there for another 2 months for it to come down and break this level right here. It took 2 months for you to actually erase all the gains that you made in probably maybe about 6 months to a year. And if you sat down and after the first month, if you came in here and after the first month, the price came here and you're still in profit, and you're like, oh my goodness, yeah, I'm just going to wait, and you allow the price to come back down here and wipe your account out, then you don't deserve to be traded. Because guess what? After the day candle, so let me just show you something real quick. Let's use the tool again. Let's go here. Take this tool. All right. We'll just draw a little line right there. Okay. It's not straight, but all right. So you came here, higher lows to higher highs. Remember, once the line breaks here, you can safely take your profit. And you know that you would have made nice money. So you would have been out right there. Okay? So watch this. Price came up, and let's say it went all the way up here, and you're in profit. Okay? Let's go down to the daily time frame. Let's look at how long it took to come back and even break this higher high that was created. I'm going to use a straight line just so you can see it better. Let's see. Let's take this out. So let's use a line. We had it on a line, right? So this would have been your higher high, all right? So you got in from here, and let's measure this. How many pips? So you got to this line right here. That's a nice 53,000 pip move, okay? So price came here. So look at what happens now. So let's say you go on your daily, okay? And this would have been the trade that you took. Where is it? Where is it? Where is it? Where is it? That market. Oh, here we go. Okay. This would have been the trade that you took. This is where you would have gotten in. This would have been your take profit. All right. So let me just use this tool so we can get more of detailed analysis. Okay. So you came in here. This was your entry. This was your take profit. All right. But let's say you allow the trade to run all the way up here. Okay. Watch this now. So you came in here. Price came up. Remember, the red line is in fact your take profit. So it hit this red line, your take profit is hit because it's higher lows to higher highs, right? And let me just do this here. So you'll see once it broke that line, it's going to be a higher high. Let's look at the monthly time frame. Okay. So once it broke that line, it's going to be the higher high on the monthly. Watch this. Okay, there we go. All right, let's look at the monthly. Okay, here we go. Now, prices here, take profit hit. Remember, from this green line all the way up to that red line, that's 50,000 pips. Okay, there we go. Now it took from your entry to 1, 2, 3, 4, 5, 6, 7 months for you to get to this area, right? Now watch this now. If you go back on your daily, look at how much time you'd have gotten to come out of this trade still in profit. Okay. So this is on your daily. This is where price hit. Okay. Price did this. It went up. You're over there now. All right. Okay. Price is still above that line. Okay. Now price closed under here. Okay. One whole day, 24 hours. You made so much money. Okay. Take your profits at your higher high and wait for your next higher low before you get in again. So watch this. That's where the price is. So you're out. You take your profit here. Look at what happens. So the price did that. Now notice you're at a higher low again. Okay, go in. Remember, higher lows to higher highs. So you go in. Price did that, came down. It did all of that. Okay. And look at what happens. Price came up, you're now at a higher high again. Remember, I mentioned to you, every single high is going to get broken. Every single high is going to get broken because remember, this is where your entry was initially. Okay. But I'm just showing you that when you are on your smaller time frames, you do have opportunities to actually take and trade the trend. Take your higher lows, exit on your higher highs. Remember, your original entry would have been here. So the price kept going and it kept doing that. Now it's all the way up here. Now look how long. Remember the point is now. Look how long it would have taken for you to get all the way back down here. You'd have literally have to be waiting for one whole month, which is basically 60 days Now, if you're seeing your profit going on for 60 days, guys, and you made so much profit, why would you still be waiting again? And the trend is higher lows to higher highs. I don't get it. All right. So that's basically it. I mean, I'm sorry, the video is long, but like I said, I really wanted to take the time just to kind of introduce you guys to the strategy and just know how to actually trade the strategy properly. Okay. So once you come out of this and you look, fast forwarding back to what we're faced with this week. Again, I told you guys, those of you who are watching the channel on Friday, I told you once it hits a higher high, and especially it's Friday, I'm out. I'm just waiting for my next setup before I go in again. Price is at an all-time high. There's no need for me to be buying at these levels. What I'm doing is I'm waiting for the pullbacks, okay, so I can buy again. Because as you can see on these time frames, the price keeps making higher lows to higher highs. All right. So welcome to the US30 analysis. I promise the next number of videos are not going to be this long, but I just wanted to take the time just to show you guys how I set my charts up, how I'm able to do my analysis and what I'm expecting. And for this week, like I said, I am still expecting the market to continue in its trend by making higher lows to higher highs. That's it. All right. So thank you guys again for watching. We're going to do great things together. If you are patient enough to just wait on your setups, you will be successful. Don't chase the sells. Any sell that market makes, it's only going to be a temporary retracement to make the next higher low on your largest time frame. All right. So thank you guys again for watching. Thank you, God, for your blessing and for your goodness. Pray that you'll be anyone watching this video may be instrumental in helping them to be successful. We thank you and we love you. Amen. All right, guys, take care. And those of you who have not yet subscribed, I have a Telegram channel, Auberstrategy. I post some things there from time to time. And I also have Instagram, Auberstrategy on Instagram also. Feel free to reach out to me with any questions you may have. Um, you know, just so I will warn you guys, because I've tested this strategy myself and I'm not selling it to anybody. Please don't get offended if I tell you I really am not concerned with any new ideas that you're coming with. My strategy works 100% for me and I'm comfortable with it. I'm not looking for any new ideas. So if there's something that you want to try, please feel free to try it on your own. I'm just not going to partake in any kind of discussion, trying to pick my strategy apart. That's all on you. I've done my research. I realize that it works. Now it's time for you to do your research and prove your different theories. So, that's all I got to say on that. But like I said, reach out to me. I'm available to answer any questions that you may have. Come to me with questions, not with opinions. I don't care for your opinions. All right. Thank you guys. Have a wonderful night and happy trading this week. Bye-bye.